Hi, this is Steve Young again for the Co-Roundtable. We continually like to track and talk about and report on the prices of companies. Because in capitalism, in markets, it's prices that drive action, they drive behavior. Price is too high, you don't buy it. Price is very, very low, you buy a lot. So there's this company most of you probably have heard of called Airbnb, which invented a new business of linking up people who have living space, a bedroom and a bathroom or something, and other people who are traveling and who need a place to stay. And you don't need to go to a hotel or motel. You just use the internet to link up with the owner of a place to stay, and you work out payment, and you show up, and you stay there for 2 days, 3 days a week. Sometimes now on Airbnb, you can get very expensive, luxurious places. You can do your vacations, et cetera, et cetera. So Airbnb has been a private company, owned by a few people. They put their money into it. They developed a business. Now these people want to sell their ownership interest, and the company will issue more ownership interest to the public. So the company becomes a public company through an initial public offering. So Airbnb has released its information. It's going to market, and it's valued at $35 billion. That's a lot of money for a company which basically links up people over the internet and doesn't have a lot of assets. And it depends on having lots and lots of people, really suppliers, provide lodgings, and lots of other people having a demand for lodgings. Next some interesting valuation issues around oil companies. To Exxon announced recently that it is cutting the value of its assets on its book, not the stock market price. That they don't control the stock market price, but they control what they value their assets, their land, their property, their housing, their accounts receivable, these accounting categories for assets. They're cutting their this by about $20 billion. Now, other oil companies have also done that recently. Let's see, Royal Dutch Shell said earlier it would write down its value by $22 billion, and BP is writing down as much as $17.5 billion, and Chevron is going to write down by about $10 billion. One of the reasons for this is it is most likely, and in fact it is very probable, it is realistic that the value they will get from their oil and gas reserves will be less because the price of oil is down. If oil is selling for $10 a barrel and you've got 10 barrels, that's a certain asset value you have. But if oil is selling for $100 a barrel, your 10 barrels are worth a lot more in cash terms. You can sell it for more. So what these oil companies are having to reflect is, I think, two forces. One is the glut on markets, and two, customer demand shifting away from hydrocarbons out of a concern for the negative impact of hydrocarbons on the climate. So, and also if you go out in the out years, let's say you go out 20 years and these companies have huge reserves underneath the ground, but our economy has moved on and we no longer want hydrocarbons. We're using wind, solar, maybe nuclear, we have batteries, we have various sort of cells which generate electricity. And so these companies are sitting there owning stuff under the ground which nobody wants. It doesn't have much value.